Good morning, everybody. We're going to get started here in just a couple of minutes. Good Monday morning, I should say. Just looking at futures here this morning, we are pulling back a little bit here in the NASDAQ 100. We have obviously had a big options expiration Friday, so that's something to keep in mind. All right, almost ready to start. And if you're just joining us here this morning, if you could just quickly let us know again if audio and visual works. As always, that would be great. Just a quick yes in the chat box would be amazing. And then we're going to get started. All right, perfect. Cool. All right. Let's get started. Again, good morning, everybody. This is our Set the Market morning show. Started a few weeks ago. It's supposed to be 10-15 minutes going over the most important things in our view, or some of the most important things that we are watching. Good Monday morning. It is the 21st of October. We have about, let's see, a little more than 2 weeks to go until the U.S. election. And I think also, by the way, the markets are starting to behave a little bit underneath the surface. We're probably going to see some more indigestion now. No market crashes, at least not that I can think of, but more indigestion. I think that's going to make things a bit more interesting. Of course, the inflation trade is on fire. In fact, that's what I would like to talk about this morning. In fact, speaking of the inflation trade, I have a great privilege to announce to you that we have published the interview that I have been mentioning for a few times, that with Nancy Davis. She is an absolute rock star. She's the ETF fund manager of, among other ETFs, IVOL. And I'm going to quickly put this, I'm just quickly type it into the chat box. Okay. The link to this, it's in the chat box now, so you can watch this. She talks, we in this interview talk about owning inflation, and something that I've been talking about now for months and months and months, and we've been making a bigger and bigger deal about it in terms of the importance of understanding this. She's an inflation expert. And so I'm hoping this is opening more and more eyes and to people people kind of paying attention to this. Now, this week we are coming. We're starting the week with massive rallies last week in gold, in silver, in gold miners, uranium, the inflation story. Right now, this here is a multi-year chart of silver at the top. These are all ETFs, SLV, GDX, gold miners in the middle, and of course gold at the bottom, which this morning gold futures are up another 75 basis points and climbing essentially, right? So I think gold itself might be getting a little bit ahead of itself, but I want to preface this with putting into context in just a minute. But gold miners and silver, I mean, last week silver was up, what, like 6%, or last Friday silver was up, this is a daily chart, 6%. So we think some of these moves are just starting, but remember, these are more allocations than quick trades. There are trades to be done here, but I think a lot of people who try to trade this stuff too hyperactively are going to inevitably do a lot worse than people who just basically look to own this stuff. And so I purposely, if you're an Inner Circle member, I purposely have added gold and gold miners and silver in what we call bucket 3, which is more of an allocation, like a kind of buy and just keep it put for a while, as opposed to a hyperactive in and out kind of deal. And I know a bunch of funds that tried to trade gold, this year. They're definitely not up as much as gold is. In fact, not even close, about half. Right? That's the risk here with this inflation trade. That one tries to get too cute, and I think that's going to be a very, very bitter pill to swallow for a lot of people, a lot of self-directed investors who can't get their head around these kind of things, and they think they're just trades. These are really not just trades. So that gets me to some stuff that I found over the weekend that I would like to share with you this week to start off the week. All right. So one of the things that we've been talking about over the past number of in fact, for 6 months or more now, but more and more so over the past few weeks, is this whole thing on uranium. We have uranium in a bunch of our research products, and I own it too, of course. There are multiple ways of doing this. URA is an ETF that does this. And what's interesting is that it takes a headline from a big tech company for people to wake up. I think that's very sad. I think it's very risky. That's what it takes. But nonetheless, here we are. So you probably saw, and this is a New York Times article that I came across on the Twitter sphere over the weekend. And so basically you saw 2 weeks ago or 3 weeks ago, I think it was, Microsoft saying they're investing in nuclear. Last week it was Amazon, Google as well. So all these companies are saying, hey, we have good things, AI, but we need more energy because the government hasn't been helping them investing in energy. They need to do it themselves now, basically, kind of, is sort of like the headline here, right? That's not exactly the details, but the headline good enough, right? So basically, the whole energy, the inflation trade, it's all this stuff is inflationary, by the way, right? And so you saw what happened to URA last week, right? URA last week on the weekly chart. And there are other ETFs to play this, or single name stocks. Although again, as I said, a lot of people, listen, you can trade a single name stock on this story. Just don't forget the volatility that comes with it and the idiosyncratic risk. So if you want to take the risk of seriously missing this trade and underperforming it, then buy one stock, right? But then you're also gambling and you're not really looking to participate. With an ETF, at least as a core, right? Then you can always gamble around that or trade around it. It's just a better bet in many ways from a diversification perspective as well. Again, I'm not giving advice, just from an educational perspective here. But URA is now finally at a point where it could possibly make its leg higher. How high could URA go? Oh, it's probably a double or triple over time. This is just beginning, right? No one's invested here. Energy is one of the most under-owned sectors. Been making a big deal about this. So that's that. Silver, gold miners, we talked about that. Let's go through a couple other things as it relates to gold and gold miners. And for that, I would like to go through two essentially charts. Number one, if you look at gold, and this gets a little bit wonky and a bit geeky, but I saw a whole bunch of emails come into our team, people asking, is it still okay to allocate to gold? First of all, we can't answer those questions because that would be advice. But I try to show people how much higher gold could go. And basically, gold has been tracking quite well with basically global money supply. We talked about the liquidity coming back into the market. Money supply is kind of one way of measuring that. It's not exactly the same, but you can see the price of gold, which is the yellow line. It tracks money supply. And if money supply goes up, then gold will go up. So that's that. Another thing, and this again, I told you it's going to get a touch wonky. If we live in what's called a unipolar world, this is something by a guy called Luke Roman. He is a wonderful economist, and he looks at things in ways I think a lot of people don't. So if you live in a unipolar world, and we've talked about deglobalization to our clients now for the better part of the past year and a half, how that's a trend, right? It's no longer unipolar. United States, obviously we live in a big, powerful country, but it's no longer unipolar. The world does no longer revolve just around the United States. It's less so. Not gone. The dollar remains a reserve currency for now, but it's less so. You see that in a lot of things that are happening, right? We have I mean, again, at the margin, deglobalization. And when that happens, and you can look at this here and obviously read it as well, we will tend to see a smaller ownership of treasury debt, and ultimately gold. From the bottom line is gold could be 3 to 5x from here. Not today, not tomorrow, not next week. Don't buy a call option on the surge that gold's going up. No, stupid idea. This is a trend, right? Probably a secular trend. So, is my base case gold's going to go 5x from here? It's certainly not my base case, but let's go with a double first, right? So let's get a 3,000 first, and let's go to maybe 4,005. We'll see, right? But the trend is there, and there's a lot of things coming together here, and it's not just a moving average, it's not just a breakout, it's not just some dude on YouTube telling you to buy gold because it looks great on his chart. There's a secular thing here that's happening, and again, it's the inflationary story that we keep referring back to. And then again, this other chart here, big tech is essentially saying, you know what, we have a ton of electricity and electric infrastructure that needs to be built out for us to be able to deliver AI. So if you're right now listening and saying, what's this guy yapping about here? All I want is NVIDIA and AI. First of all, I had some unbelievably great experiences this weekend with AI, stuff that you will hear over time. I have not been that much blown out of the water by AI personally. Like it's awesome, but it hasn't really blown my mind to be. And some people are probably saying, what an asshole. It really hasn't been that amazing to me. It's cool, it's great. But what I saw this weekend with AI was crazy. I mean, this really did blow my mind. And that's the promise of this, right? However, AI is getting expensive. Multiples in some of these companies are no longer cheap. Could they grow? Yes, but can they have 30-50% setbacks? You bet. And they will. There's another way of playing this AI theme, and I think it's probably with a lot less volatility, and that could be through, among other things, through energy. If you like Microsoft and you think they're going to, or NVIDIA and all these stocks, or Amazon, right? There are probably, in my view, better ways, because institutions have to buy so much energy stocks soon, and they're already doing it. And so that's really it's all the same. That is the same trade. It's inflationary. It's AI. These companies need that. Everyone knows that crypto needs a lot of energy. AI needs a lot of energy as well. So anyway, we're at the 12-minute mark. So that's between the 10 and 15-minute mark. Please make sure that you hit the subscribe button and the thumbs up like on this YouTube show, because it's going to allow you to be alerted in real time when we do this morning show. Also when we do live interviews. Also, like for example, this podcast that just dropped this morning with Nancy Davis, you get alerted to it in real time when it drops. So I would urge you to A, take this inflationary story serious, and B, watch this interview, let us know, give it a thumbs up, share it with anyone you can. We're doing our very best. I'm literally working 7 days a week, like without fail, to make sure people understand this inflationary story. Are there going to be setbacks? 100% certainly. It's not going to be a linear line, but it's an asset allocation drive rotation that I think if we ignore it, we could be in serious trouble. So anyway, again, please like this video, subscribe, watch the interview with Nancy. It's all on our YouTube channel. If you're an Inner Circle member, you got a couple of nice updates this morning, and we'll see you guys in the chat room. Until next time, until tomorrow morning, we'll see you then. Thanks for joining.